Welcome back to Alpha Recap, your after-hours wrap from stockalpha.ai. We've got a lot to unpack from Friday's trading session. Heavy volume, wild microcap swings, and a real test for the rally heading into the big SpaceX initial public offering week. As always, if you have questions, you can reach us at stockalpha.ai.
Yeah, big day. Markets closed with notable weakness and a lot of heat in specific names, not a quiet lead into a holiday weekend. So, what really stands out here is the combination of huge volume and polarized moves.
Totally. All right, quick headline tour. NVDA finished the day down about 6% to roughly $205 on about 215 million shares. That alone turned heads because of its index weight and ETF footprint.
And Nokia plunged, down roughly 13 to 14% to about $14.35 on nearly 182 million shares. Then you had several microcaps with crazy action. One jumped almost 200% to 84 cents. Another was up nearly 30% to about 41 cents. And another small name shot up over 50% to about $35.
Meanwhile, there were ugly collapses too. One small name fell about 67% to roughly 35 cents. Another fell about 22% to just under $1. So winners and losers both with huge volume.
And the ProShares Bitcoin ETF finished down about 5% to roughly $8.21, and it was down about 32% year to date. So crypto-themed products were weak as well.
Right. The thread through all of this was volume. These weren't tiny, thin trades. We saw outsized turnover in both the biggest names and the smallest names. And that forces you to treat those moves as meaningful market signals.
Exactly. When volume is heavy on a move, it raises the odds of follow-through, or at least greater volatility in the near term because real participants, institutions, and retail are repositioning.
Quick reaction. That feels like the market telling us something bigger is happening than a normal Friday pullback. So let's break the themes down. First, elevated liquidity and concentration of volume. Multiple names printed north of 180 million shares. Analysts note that means these moves weren't illiquidity artifacts. There was conviction behind them.
Right, and the second theme, divergence. Microcap mania versus large-cap retrenchment. We had speculative capital flowing into small, high-beta names, while a few large-cap tech names were pulled back, either from profit-taking or repositioning in ETFs and indexes.
So, what really stands out here is how that polarity can make breadth look way worse than headline indexes might show. A handful of mega cap moves can mask where the real hot money is flowing.
And then there's the technical and macro pivot point. Several analysts flagged a break of a key support level. Call it the market's first real test, which increases sensitivity to upcoming catalysts, like the SpaceX IPO and big corporate events around names like Apple and Oracle.
Pause for the data point. That support break was the thing that had a lot of portfolio managers rerunning their stress tests this weekend.
Yeah, they were reassessing concentration risk, especially with NVIDIA being down about 6% on very heavy volume. Some analysts treat that as profit-taking within a long-term AI theme. Others worry it's the start of a broader rotation out of crowded technology exposures.
Hold on. Say that again? So the debate is whether NVIDIA's move was a short-term correction or a sign of something bigger.
Exactly. One camp says profit-taking and hedging caused the volume spike, basically short-term noise. The other camp says heavy volume on a big down day could be a red flag for broader tech sentiment if follow-through happens.
That's a pretty central disagreement, and it ties into the next theme: sentiment and positioning risk. Large single-day spikes and collapses force people to reevaluate valuation inputs, stop rules, and position sizes.
Totally. And this week's calendar amplifies that. The SpaceX IPO is looming, and big corporate news from household names is on deck. Those catalysts can move flows across sectors quickly.
Okay, new segment. What this meant for different investor types heading into the weekend. Long-term investors were basically told, Don't overreact to microcap noise. Reassess allocations if the support break changes your long-term outlook, but stick to fundamentals unless something material changed.
Short-term traders saw opportunity and risk. Heavy volume gives setups, but whipsaws were more likely. Analysts emphasized trade discipline, tight stop rules, and clear time frames.
Options and volatility traders were watching implied vol shares reprice. The session increased realized volatility, which generally leads to higher option prices around catalysts. That can be both an opportunity and a trap.
Portfolio managers were reminded to stress test concentrated exposures. When a few names carry outsized weight, a pause or rotation in those names can erode breadth quickly.
Retail folks in microcaps got the usual cautionary note. Big percentage moves on tiny bases can be deceptive. Heavy volume today doesn't guarantee tomorrow's liquidity. Spreads can widen and reversals can be brutal.
Quick one-liners. Big move, not what anyone expected.
Yeah, that tracks.
And the mood was cautious for good reason. One of the small names that collapsed by about 67% usually signals binary news, regulatory hits, liquidity problems, or other existential issues.
Right. Okay, strategy and watch list. Analysts converged on a few practical calls. Prioritize liquidity signals. If volume supports a move, treat it as meaningful. Track the catalyst calendar closely. SpaceX IPO, Apple, Oracle. Revisit concentration and run scenario stress tests. And maintain risk management discipline. Position sizing, stop methodology, potential hedges.
Another practical tip. Watch follow-through volume over the next full trading cycle. The best way to separate a durable re-rating from an ephemeral spike is sustained, volume-supported movement after markets resume.
Analysts also debated microcap rallies, momentum versus real fundamental repricing. Some call those 100% plus moves pure momentum that will revert. Others point to the heavy volume and say maybe new information is entering the market. So there's no consensus.
And that NVDA debate again, whether it's fleeting or foundational for rotation away from AI concentration, will be a key storyline if more large caps start to weaken on volume.
Short reactions. I was honestly a bit surprised by the microcap fury.
Me too. It felt almost like a retail squeeze day in pockets while the rest of the market took a breather.
All right, let's wrap with clear takeaways. 1. Risk is elevated. Analysts across the board flagged higher short-term risk after the support break and the concentration of volume in a few names.
2. Volume matters. Heavy volume turned a lot of Friday's moves from noise into meaningful information. Treat them that way when you're rebalancing or trading.
3. Watch catalysts. The SpaceX IPO and major corporate events can amplify flows and clarify whether this was a rotation or episodic volatility.
4. Match your actions to your horizon. Long-term investors should check fundamentals and allocations. Traders should tighten discipline. Portfolio managers should stress test concentrations.
And remember the analyst lens here. Objective phrasing like data suggests or momentum indicates is how these pieces were framed. This is informational, not a buy, sell, or hold recommendation.
If you want to dig into any specific name or chart from Friday, head to stockalpha.ai, where you can ask us directly in the Q&A and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after markets reopen with follow-up on any early reaction to the headlines and the SpaceX IPO flow. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time.